Welcome to Money Chat Today with your hosts Larry Steinhouse and Rick Lee. From the School of Hard Knocks, they present with years of knowledge on how to help you make more money and how to keep it.
Hi, I'm Larry Steinhouse.
And I'm Rick Lee.
Welcome to Money Chat Today. This is a show where we help people make more money and help them keep it.
That's right.
And today we have a great guest. We have a special guest. His name is Steve Gannon. And tell you a little about Steve. Steve is the president of the Gannon Insurance Agent, and he's an expert in personal lines insurance. And if you don't already know that, personal lines insurance is typically homeowners and auto insurance. Our expert guest today, Steve Gannon, graduated from St. Joseph's University in 1990 with a bachelor's degree in finance. Steve's history includes working for big companies such as Prudential and Cigna as a property claims adjuster. In fact, Steve also sold life insurance and financial services with New York Life. After Steve received his MBA, he went to work for an Allstate agency for a few years selling auto, home, and life insurance. Actually, knowing that he could find better solutions for his clients, Steve opened his own agency, the Gannon Insurance Agency. And the Gannon Agency wrote his first policy back in August 2000.
Wow, right.
Isn't that awesome?
Yeah.
Time flies.
Due to the excellent service and dedication of Steve and his team, the number of customers has grown to more than 3,200. And Steve is here today to help us unravel the mystery and help us understand the ins and outs of auto insurance and homeowners insurance policies. Welcome, Steve. How are you?
Yeah, we're glad to have you.
Thank you, Larry. I appreciate
Glad you
that.
could make
Thank
it
you guys
today.
for having me.
So, I mean, I'm so glad you're here because, you know what? Like everybody else, I hate insurance.
Yes.
Sorry, I didn't mean that, but
No, I hear it all the time.
and I say the same thing everybody else says. I pay and I pay and I pay, and then when I have a claim, I got to worry if they're going to pay it or not.
Right.
So, tell me a little bit about, maybe you can even tell me a little bit about the ins and outs of insurance. I know there's different parts of for example, auto insurance.
Yes.
There's different parts of auto insurance. What are the basics of that?
All right, the basics, first of all, no one likes insurance. We pay this premium. We hope we never need it, and God forbid you have an accident, you're afraid your rates will go up. I think we're one notch above going to the dentist, and I realize. But the main component...
Yeah, right.
We're a cavity. But the main components of auto insurance are you have your liability insurance in case you hit someone else, you're covered, they're not going to come after your assets or your home.
Gotcha.
You have coverage for physical damage, which is your car, comprehensive, which covers like fire, lightning, theft, if your car's stolen, if you have a broken windshield, if you hit a deer. They're all comprehensive. It's also called other than collision. Collision is any type of an accident. Your car's parked and somebody hits it. You run and hit a curb, hit a wall, you're involved in another car. That's a collision claim. In Pennsylvania, we have to have first-party medical. It's a state law that if you're involved in an accident, even if you slam your door on your hand by accident, you come back to your policy for medical.
Really?
You have to have medical. It's just part of the policy. And then there's other bells and whistles you can have, towing and rental car coverage, and we can get into other stuff as far as full versus limited tort, stacked versus unstacked, and all that fun stuff.
Yeah, it's good to know that.
Sure.
Yeah. So basically, if I understand you right, so the first part you said was it was liability, so that protects other people.
That's protecting you in case you're at fault and other people are saying, I'm injured.
Right, that makes sense.
I want money.
Sure.
Yes.
So and then I understand that most states have a minimum, and I'll be honest with you, it's funny, I don't know what the Pennsylvania minimum is. I'm sure you do.
Yes.
So now what is that?
The state minimum is bodily injury, $15,000 per person, $30,000 per accident. So what that means is you rent a car. If there's one person injured, the most they can get is $15,000, assuming that their injury warrants that. If there's two or more people, the most they can get collectively is $30,000.
Okay.
The maximum, or the property damage state minimum is $5,000, which is extremely low. That's how much they would pay to fix the other guy's car or cars. So if you were in one person, push them into another car, again, if you have the state minimum, that $5,000 is going to go like that. There's going to be a shortfall, and then they're coming after you. So we never recommend having state minimum coverage, and then $5,000 medical. They're the only things that's required by the state. Now, of course, if your car is financed, you have to have full coverage, and then we get into the comp and collision. But state minimums are very low, and we don't recommend them.
No.
So what happens? So you have a state minimum. Let's say like $5,000. I hit somebody else's car. My minimum is $5,000. So then the other person can come after me for the difference.
Yeah.
Is that how it works?
So let's say you hit a car. It doesn't have to be a expensive car. Nissan, Honda. I mean, you get into the Infinitis, Mercedes. You're talking a lot of damage. But so if the damage is $8,000, $10,000, and your limit's $5,000, your insurance company is going to pay the $5,000. They'll try and get them to sign off. They're not going to come after you. But realistically, they're probably not going to sign off on it. They're going to want to come after you for the difference.
Huh.
So you want to have adequate coverage limits.
Absolutely.
So, and they can attach your assets, they can attach your home.
They can try. I mean, they get attorneys involved, and it gets ugly. They'll try and come after any assets you may have.
Mm.
Yeah.
So what would, somebody trying to save money, somebody doesn't have a whole lot. I mean, I guess you're really, I know it's an individual basis, but really, what should people be thinking?
We, certainly for homeowner, we recommend at least $100,000 per person, $300,000 per accident, on the bodily injury end, and then $50,000 property damage. That's a good start. And we often recommend having an umbrella policy, which is not to jump ahead, but a standard umbrella is like $1 million over top your auto and home. That if your auto liability limits are exhausted, they're not going to come after your retirement money or maybe equity you have in your home. You got the umbrella stepping in with another $1 million. That's going to hopefully make them go away.
Okay, so that comes out. And then we have the medical part you had mentioned.
Right.
Now, that was interesting that you said basically it means that my policy covers my medical bills
Yeah,
no
it's
matter
first
what?
party, meaning it's for you.
Oh,
so
okay.
if you're involved in any accident, again, let's say you're parked at the light and someone rear-ends you, even though they're at fault, and you might be going through their carrier to pay for the repairs to your car and the rental vehicle, by state law, you come back to your policy for medical. It's a state law.
Huh.
If that injury is exceeded, it then goes to your health insurance plan.
Oh, okay.
Okay?
That's interesting.
So it's important that we usually ask our clients, if they don't have health insurance, we're going to recommend more than the state minimum of $5,000.
Right, okay.
But if they do, a lot of people don't want to pay for more medical because it's going to go to their health insurance, so why pay more for it? There's other coverages you can get that might be a little bit more important, like adding income loss coverage onto your policy.
Interesting. And income loss coverage, it's like a disability policy?
It's like disability insurance on your auto insurance. It has to be related to an auto accident, but again, let's say you're involved in an accident, you miss work for 3 months.
Yeah.
You can now have some coverage through your disability portion of an auto claim.
Huh. Is it cheaper to do it that way than it is to get a disability policy?
It's much less, but it's much more limited. It's only from an auto accident. And my understanding, and I'm not an attorney or a claims adjuster anymore, you can double dip, meaning if you've got a personal disability policy for hypothetically $2,500 a month and you have $1,000 a month on your auto policy, you can collect on both.
Oh, that's fascinating.
Which
Okay,
is not,
great.
Yeah,
I know we're here to talk about personal lines, but
yes,
but it was just it's interesting to find out that you can actually get a disability portion on your
absolutely.
auto insurance.
Yeah.
So
that's good to know.
Here's the one thing that drives me nuts. What in the world is tort and full tort and part tort and
sure?
Is it something with strawberry?
I want to get the limited torque or the full torque. It's not torque. It's not the horsepower or a car or anything like that. Tort is specific to Pennsylvania, so there's only 2 or 3 states that use a tort type thing, but Pennsylvania is one. So everyone has to elect either limited tort or full tort. So what limited tort is, it's not saying you cannot sue, but it's saying you can only sue for pain and suffering if someone hits you and you're injured if it's a serious enough injury.
Huh.
And it's worded kind of ambiguously as permanent and serious disfigurement. So we usually tell it's a subjective decision. I don't tell people limited tort's right and full tort's wrong or vice versa. It's a very individual decision.
Interesting.
Because price difference wise, full tort in the suburbs is probably 20 to 25% more expensive than limited. In the city of Philly, it can be as high as a 30 to 40% price difference between full and limited tort. It's huge.
Wow.
So getting back to it, so you're stopped at a light, someone rear-ends you, you've got limited tort. I tell my clients, if you've got like soft tissue injury, backache, neck ache, generally you can assume you cannot sue. It has to be a serious enough injury.
Oh, okay.
So if you have a broken arm, that could be considered serious enough.
So that's if you have limited tort.
If you have limited tort, it has to be a
right.
serious enough injury. With full tort, you can sue whether it's a major or minor injury. But again, you pay more for that option to be able to sue. Again, in the suburbs, about 20 to 25% more across the board on your whole premium.
I'm going to come up and I'm going to have to say, is that constitutional?
It's got to be because it's been on file with Pennsylvania for a while now, so I can only assume so. Back when I used to do claims way back at the start of my career, it was Act 6. I think it came out in the late 80s, around 1990. It's been in place ever since, and there's been many an attorney that argue, is this injury serious enough when you have limited tort?
Sure.
So
Right.
any personal injury attorney wants everyone to have full tort. I personally don't care. I'm the insurance agent. I just want to make sure my client understands it, makes the decision, and I let them know whatever you elect, you can change that next month, next year. If you want to switch to full tort or switch back to limited, we'll send you new forms, sign them, send them back. So it's not set in stone.
Can we, predate it the day before the accident?
Unfortunately, we can't go back after a loss.
Yeah, right.
That would make that somewhat illegal /
No.
Couldn't resist.
Yeah, no, it can't hurt to ask. It cannot hurt to ask.
No, that's very, very interesting. So, okay, so you don't actually recommend either one,
We
do
just
recommend
explain it.
Right.
I say people in my office, probably half of them have limited and half of them have full. It's not like we all have full and we're pushing people towards limited. It's a very much of an individual decision. Now, I will say that I personally have full toward because whatever I have, my little kids have. And I've got three kids under the age of 10.
Right.
So they get what their parents have. Now, once they're old enough, will I switch? There's a good chance I will. But I know there's several people in my office who have limited because they believe that's their choice and that's fine for them. So it's whatever you feel is right to you.
Okay,
if you do not want to give up your right to sue, you want to elect full tort.
Right, I understand. And what's so you think it's about a 25 to 40% difference?
Well, in the city, it's between 30 and 40. In the suburbs, it's 20 to 25%.
Okay.
So $1,000 premium limited tort, you're talking $1,200 to $1,250 full tort.
Right. And is that 25% difference just on that portion?
No, on your whole premium.
Policy. Okay,
yeah.
gotcha.
Wow.
Okay,
Yeah.
gotcha.
So it's substantial enough to make make it a valid decision.
Right. Now, a lot of people in many urban areas choose to drive without car insurance illegally. So could you talk about uninsured and underinsured motorist coverage?
Sure. So uninsured and underinsured motorist also goes back to pain and suffering. So we'll go back to the scenario. You're stopped at a light, somebody hits you. Uninsured motorist would cover the pain and suffering aspect if you're rear-ended and the guy hits you, takes off, or does not have insurance. Now again, your tort still comes into play. So if you've got limited tort, you still have to have a serious enough injury to be able to make that claim for pain and suffering. But if you do, uninsured motorist is where you would make that claim. Medical's different. Medical will be paid by medical, and if that limit's exceeded, it goes to your health insurance. But uninsured and underinsured have to do with the elusive pain and suffering.
Elusive, I love that. Right?
Elusive pain and suffering. Now, let's say go back to the scenario. You're hit, and the guy does have insurance, but let's say your injury is deemed that it's worth $50,000, whatever happened to you.
Right.
And this guy's limit's $15,000. Underinsured motorist picks up the difference. So that's underinsured, and underinsured is, like you mentioned, a lot of people
Just
in
have
certain
state
parts
minimum.
of the city may not have insurance, if at all. And if you get hit and you're injured, you come back to your policy under the uninsured motorist.
Right.
So underinsured is very important for you to have.
They're both important. I often see people who have one and not the other. I recommend if you're going to have them, have both.
I see. Okay, cool.
And that's an area where some people sometimes try to skimp, right? And it's not really all that expensive.
Again, it can be depending upon where you live and your car limits and how many cars and if you have team drivers. There's a lot of variables.
Right.
But especially I tell my clients, I've seen people paying for full torts, you're paying more for the right to sue, and they've either got the minimum for uninsured and underinsured, or they don't have it at all.
Wow.
So I'm like, it makes no sense paying for full tort without having uninsured and underinsured.
Right.
Absolutely, makes a lot of sense. Sure.
Either do it the right way or don't do it.
Sure.
And they didn't get sage advice from their prior carrier or agent possibly, but again, we try and give them direction on what we feel they should do and help them make a decision.
So then there's collision and comprehensive, and then collision is if you get into an accident.
Right.
Comprehensive is I guess an act of God or other
anything
things.
other than collision.
Okay.
It's a theft, vandalism, glass claim. Collision with an animal is considered comprehensive. Any comprehensive claim is not surchargeable, by the way. So if your car is stolen, vandalized, flooded, glass claim you hit an animal, that's not a surchargeable incident on your policy. They can only surcharge in the state of PA if it's deemed that it's an at-fault accident, and they paid out. The surcharge is going up in the month of July from $1,350 to $1,450. So it has to be an at-fault accident, and they paid out more than $1,450.
Wait a minute. Okay. So how much is the typical surcharge?
No, the state mandates that an insurance company can't surcharge you unless the insurance company paid out more than $1,350.
Oh, I see.
That surcharge threshold next month is going up to $1,450.
Okay.
And then there's parameters on what the insurance commissioner will allow them to surcharge. On the high end, I've seen people rates go up 50%. That doesn't always go up 50%, but I've seen it on the high side. It's usually just on the driver that had the accident. It's on his or her primary vehicle.
So if it's $1,450 that the insurance company paid out, so if I had a $500 deductible, for example, and my claim was $1,950 or less, am I still not being surcharged?
Correct. It's what they paid out after your deductible.
Okay, gotcha.
So let's fast forward to next month. If the insurance company paid out $1,500 after your accident, you're going to get surcharged. Whether they paid out $1,500 or $15,000, the surcharge will apply. Because that's how the insurance companies are filed with the state. They can't, we paid out $15,000, we're going to make Larry surcharge 60% instead of 30%. If they exceeded the threshold, you're going to get surcharged.
They've driven with me before.
I've seen you drive.
Now is the surcharge a flat fee or a percentage?
It's usually a percentage, and again, it varies by carrier, but in most cases it would be based on that driver and which car he or she is primary on.
Right.
So if you got 3 cars in the policy, and you had the accident, for example,
Right.
it'd be the car you're primary on. Certain carriers, it might be 30% the first year on your car.
Right.
They generally won't do it across the policy, but again, it does vary by carrier.
Interesting, very interesting. All right, so I'm curious about this. This happens to me all the time. I go and I rent a car,
Yes.
and the guy says, "Do you want the damage waiver insurance?"
Yes.
And I hear rumor that I'm not supposed to take it. I hear rumor that I'm supposed to take it. When I don't take it, the guy goes, and I don't know what to do. So
Yeah.
maybe you can shed some light on this.
Yeah, we get this a lot. As a matter of fact, there's a funny story. We were in Disney World probably 5 years ago, and my wife's cousin's in line. He's a few people ahead of me, and the guy for this rental car company was insistent that he take it. And he's like, "Buddy, I talked to my insurance agent. He said I don't have to take it." And the guy's like, "Well, your insurance guy doesn't know what he's doing." He's like, "Watch your mouth, buddy. He's right behind me here." So,
That's hysterical.
Yeah,
but
yeah.
you know what? It's I know an insurance agent who used to work for a big rental car company, and these guys get bonuses on selling their coverage.
Right, of course.
Here's the deal. If you're
Oh,
in the
cute.
continental United States and renting a car, as long as you have full coverage on one of the vehicles in your policy, that will apply to the rental car.
Okay, so full coverage means comprehensive and collision.
Correct.
Okay.
Now, if you only have liability on all of your vehicles, you absolutely do need to take physical damage coverage on the rental car because you don't have that on your policy.
Okay.
But if you got full coverage on at least one of your vehicles, you can decline the optional insurance. Now, if it was only $2 or $3 a day, I would probably tell all my clients to take it because that usually would make their coverage primary. You don't have to worry about your deductible.
Right.
Because most people decline it, but if you've had a claim, we've had a few clients have this, it could be a not-at-fault accident. They're rear-ended or their car's parked and someone hit the rental car. When you go to turn it in, they automatically charge that credit card on file for your deductible, which is probably $500.
Right,
So
sure.
you're getting hit with that right off the get-go. Anything over that, your insurance company would take over just like it was your car. So if it was a $1,500 of damage, they'll pay a $1,500 minus your $500 deductible, hypothetically. So it can save you that trouble, but because they often charge you $15 and $20 a day, almost the same price as the rental car.
Right.
Yeah.
It's crazy.
Most people are going to say no way. Now, if you're in Europe and other countries, it only applies again continental United States
I see. That's important. That's
and
important.
Canada.
Okay.
In Canada, we can provide ID cards for Canada, but again, if you're in Mexico, Europe, different countries, all bets are off. No carriers will afford coverage in other countries like that.
Right.
So if I understand it correctly, so if you decline the waiver, I'm sorry, what's it called again?
There's different names for it, but
Okay.
you decline the coverage from the rental car
Okay.
company.
So if you have a deductible of $500, you're only on the line for the $500 deductible, just like if it was your own car.
Absolutely.
Okay, great.
Yeah.
That's great advice.
Yeah.
That's very
Yeah, that is, because they do try to sell it.
Yes, yes.
I personally generally decline it too because of the cost. It's
Right.
too expensive.
That's good to know.
So if I went online and got one of those bargain basement policies, would I get this kind of advice?
Sure. I don't think you will. I do not think you will. Well, most of our clients like having an agent. And again,
Right.
we're not perfect, but me
Yeah.
and my staff, I've been in the business going on 21 years. My staff, we've got combined in excess of 75 years experience. Everyone in there has at least 3-4 years experience. They're all knowledgeable. If they have any questions or doubts, they'll come to me.
Sure.
We're not perfect. If we don't know the answer, we'll get back to people. But we generally try and give the best advice we can and help people make an informed decision.
Yeah, for me personally, I have an agent with a major carrier, and I would never go back to one of the bargain basement ones because I was always uneasy when I was with them, wondering if I had a claim, I had nobody in my corner.
Right.
And I feel my insurance agent is great. They're really responsive, and the price is fairly close. In fact, I think it almost beats one of the, direct.
Sure.
So I would never go back to dealing direct because I just like, if I had an accident, I'd have somebody in my corner, somebody I could call up and say,
Well,
hey,
that's the thing. When you're dealing direct, and we deal with at least one carrier that also sells direct. When you're dealing with a direct carrier, every time you call the customer service number 1-800, you're calling Timbuktu. You don't know where you're calling. You're getting someone different every time.
That's right.
Yeah.
You don't have a relationship with that person or that carrier.
Sure.
Whereas when you have an agent, generally you get a relationship with, if not the agent,
Yeah.
one of the staff members that's
Right.
handling your account and
Right.
giving you good advice
Right.
and helping out when needed.
Right. Can you give an idea of people when when they get into an accident are often very upset and their emotions take over and they sometimes say things they shouldn't. Is there any if anybody's involved in an accident, can you tell us what you should and shouldn't do as it relates to insurance?
And again, I'm not an attorney, but
No, I understand.
when the cops come, you have to give them your version of what happened if there's a police report. Now, in the city of Philadelphia, they no longer come out unless I believe there's injury or it's a serious loss. They stop taking police reports for now, at least. But if it's in the suburbs or if it's in the city and the cops do come out, give them as best you can. Get yourself together, your version of what happened, because the other person is going to. And if you don't give your version and they only have their version, you don't want that police report slanted against you, because on a normal claim, if it's my version versus your version, and then the only objective thing is the police report, that's going to weigh in. Because your insurance company is going to take your statement, try and take my statement. My insurance company is going to do the same thing, and then they'll get the police report. And if we're both saying you're at fault, you're saying I'm at fault, but the police report says you're at fault, that weighs heavily in favor of myself.
Right. And some people, I've heard stories where somebody got in an accident and the other driver tried to tell them, don't call the police, I'll pay you directly. That's a mistake, right? I mean, if you can, you should always get a police report,
I always recommend the police report. Again, in the city now, they won't come out of Philly unless it's really... But barring that, I do recommend having a police report, because not everyone, but some people do lie, and they change their tune after they talk to a friend or a spouse saying, well, you're going to get our rates increased, even though you rear-ended him. So some people want to change the tune, which is not right, but there are those people out there. So if it's documented what happened, that helps. Doesn't mean that's going to be gospel truth.
No.
But it will help put the facts in place.
Very cool. So let's talk about homeowners insurance also.
Sure.
If you own a home, it's a little bit different than when you rent a home, right?
Yes.
And I keep hearing more and more people. And actually, it surprised me that I find so many people who rent homes don't have renters insurance.
Yeah.
What would be it? I mean, look, it's kind of obvious that they should have it, but what's a real advantage? Why should they really have it?
For the price of renter's insurance, it's almost crazy not to have it. And we've had several clients with renter's policies. One was in a larger apartment building. There was a fire, not in their unit, but in another unit. They had a little bit of smoke damage in their unit, but the fire marshal condemned the building. They couldn't even go back and get their stuff. So, I mean, the money never replaces your stuff, but at least it helps console you a little bit that you have coverage for all your stuff. So, in this case, for the premium of, it was like $125 a year. They got a check for whatever it was. I'm going back 5 or 6 years, $30,000 or $35,000 for their belongings. So, I mean,
that makes sense.
You pay pennies on the dollar for the coverage.
Right.
We all know stuff does happen. You hope you never need the insurance, but stuff sometimes happens.
Right.
And the main components of a renter's policy we were talking about earlier with auto insurance are coverage for your belongings first and foremost. Sure. And I tell people, ask, well, how much should I have? How much? Put the coverage on for what you need. If you only have $20,000 of belongings, then do $20,000 of coverage. No point in getting $40,000 of coverage when you have $20,000. They're going to pay based on what you had, obviously.
Of course, right.
But another important component of renter's insurance, number one, is loss of use. So after that claim you can't live there, they'll pay to put you up somewhere else. And then liability coverage, very important. Let's say you were smoking and accidentally started a fire. You're going to be getting sued.
Sure.
So it's important that you have that coverage. Or someone comes in your apartment and gets hurt somehow, again, important that you have that coverage in place. If for a basic renter's policy, you could be talking as low as $75 a year, but on average, I might say between $100 and $200 for renter's insurance with replacement cost on your contents, and fairly reasonable. And if you have auto insurance with that same carrier and you package it, you get a discount.
That's amazing. I can't get over how many people don't have rental insurance. I knew, years ago when I rented apartments, I always had it. I didn't even. It's funny. I knew I needed it. I just until now I didn't realize how important it really was.
Yeah.
So and then you have homeowners insurance. I own a house. I have a mortgage on the house.
Right.
I know my mortgage company says I have to have insurance.
Yes.
Okay. So what's the difference between that and a renter's policy?
All right. So home insurance, the biggest difference is you're now insuring the building. You're insuring a building that you live in. So. Again, the main components of a home policy are dwelling coverage. That's the house you live in. And again, you generally want it insured for full replacement cost. Other structures is on a home policy, not on a renter. So that's anything on your property, not attached.
Like a shed?
Not attached to the home.
Barn.
Like detached garage, shed, fence, swimming pool, gazebo, barn. You have your liability coverage, and you've got a bigger exposure than you do as a renter because besides someone getting hurt in your apartment when you're a renter, it's your whole parcel of land. So they slip on your sidewalk. We've all heard those stories.
Oh, yeah.
You've got coverage now because it's not as common, but it does happen.
Right.
You didn't shovel properly. You had a sidewalk block that was heaved up. Somebody tripped.
Yep.
In this day and age, a lot of people can tend to be sue happy, so you need to have the coverage.
No, absolutely.
And there's medical payments coverage if someone got hurt in the property, and they're not necessarily suing you, but they're just looking for some coverage for the medical bills.
Right.
That will kick in. to help pay the medical bills. But
actually, I heard a story about that once.
Yeah.
Where a woman just fell, knocked all her teeth out.
Yeah.
On the sidewalk, and it was just the sidewalk was raised up a little bit.
Yep.
She banged on the door, not because she's like, I'm suing you, because do me a favor, call an ambulance.
Yeah.
And sure enough, the people called the insurance company and said, hey, this person fell on my porch. What do I do? The insurance company contacted her and said, we realize you're not suing, but we can cover your medical.
Sure.
And it was very well done. I was very happy to hear that.
Yeah.
Wow.
So it was well done. Did you know who that person was? That was my mother.
Oh wow.
Oh wow.
Jeez. I mean, stuff does happen.
Yeah,
It
yeah.
absolutely does. It's pretty amazing. So that's all good stuff. So when you're doing your homeowners policy, there's always these riders and little extras, and
Sure.
the insurance company says, do you want this? Do you want that? I mean, a great one is the engagement ring rider or the jewelry rider.
Jewelry rider, right.
What do you really recommend people do with that?
Well, most homeowners policies give you certain limits for things. In a lot of policies, you might only get $1,000 for theft of jewelry. Some policies you get more, $3,000 for jewelry. It depends on what you have. I mean, if someone's got, engagement ring is probably the most common thing that we schedule on a policy. In a lot of cases, it's not that expensive, but it's covered for all risk. If that ring accidentally got flushed down a toilet or down a sink or is just lost,
Right.
if you don't have that scheduled in the policy, most homeowners policies don't cover items that are lost. They cover theft, but if you just misplace something, it may not be covered. Now, it depends on the policy. So it's important that you got 3, 4. I mean, we've got people who've got individual rings in the $35,000, $40,000 range just for one piece. So it can get expensive depending upon the amount, but on average, I'll tell people it's about $10 per thousand. Again, if you're in the city, it's a little bit more. But so if you got a $10,000 ring, might run you on average about $100. Not crazy, but it's covered if anything happens to it.
Sure. That helps. Now, there's a lot of confusion around. I know I don't fully understand it yet, about what types of water damage are covered. Now, people sometimes mistakenly think that their homeowner's insurance covers flooding. But what if say, the hose on your washing machine bursts while you're away for a week, and water flows for a week? What is covered as far as water damage, and what isn't by a regular homeowner's insurance policy?
With most homeowners policies, again, there's different types of policies, but for your standard homeowners policies, when a pipe breaks or you get some kind of plumbing system malfunction or breakage in the home, the ensuing damage is generally covered less your deductible. The insurance company does not cover the system that broke. So if you got a toilet that broke, they're not going to pay for your toilet, or a hot water heater burst. They'll pay for the damage it caused. They don't replace the water heater because that's considered maintenance.
Oh, right.
So a pipe breaks, they don't pay for the plumber to fix the pipe. That's on the homeowner. They pay for the ensuing damage. Also, if that pipe's behind a wall or under a floor, they'll generally pay access to get to the broken pipe. And if it's behind a wall, the access to it, and then to fix the wall and repaint that room or whatever the case may be. But the plumbing system itself is not covered. Now, flood insurance is a separate policy generally. Flood insurance is a federally backed program. It's completely different. Rates are set by the government. They're the same whether you go with A, B, or C company. If you're not in a flood zone, it means you're in a preferred flood zone, and the rates they're flat. They're just set. And it's pretty reasonable. It might be like $365 for the year, which would cover the home up to $250,000, and your contents for $100,000. But if you're in a flood zone, the rates can often meet or exceed the rate on your home insurance. It can be expensive depending on where you live. But no, it's not covered by your home policy. At any time a rainstorm, water, as soon as rain hits the ground, it's considered surface water. That's excluded under every home policy.
Surface water, right?
So if people say, well, water came in my basement from rain, that's generally not covered, whether it came in through the foundation. And again, if your home insurance covered all that, we'd all be paying 3 times the premium that we pay now. Sure. And many people feel they pay enough as it is now. But there's a rider you can add called sewer and drain backup or water backup that will cover water that comes into the basement if it comes in through that sump pump well. It'll, you set a limit. The standard's $5,000 for water backup. So if water backed up to that sump pump, it couldn't handle it because the storm knocked out the power, or it just couldn't handle the rain. At least you have $5,000 or $10,000 of coverage where you may not have had anything. So, for our clients that have basements, especially finished basements and sump pumps, we do recommend adding that water rider. And it's not that expensive. It's about $50.
That's good advice. I didn't even know that.
Yeah.
So generally, without that rider, though, if to clarify, it sounds like anything that happened inside the home is covered. Anything that came from a source outside the home is not.
Right, and let me clarify. There's certain exclusions. Things could happen. There's exclusions in every home policy for deterioration, long-term stuff. But yeah, generally stuff from a plumbing system would generally be covered.
I see.
But anything outside, and again, let me clarify. If it's a heavy rainstorm, water comes in through the roof. That is covered.
Okay.
It's when rain hits your ground, the surface water, then it becomes an exclusion.
Interesting. Okay.
But if it comes in through the sump pump and you have that rider, you at least have some coverage.
Right, right. So if a tree falls on your roof during a rainstorm and the rain comes in, okay.
Yep.
It's a proximate cause, isn't it?
Yes, it is.
See that? I
There
know.
you go.
Ah, okay.
Fancy word.
Yeah, and regarding that, a lot of this, many things we talked about, I put in one of my newsletters. But so if you've got a heavy windstorm and your tree in your backyard is blown onto your neighbor's home,
Right.
generally that claim has to go under that neighbor's policy because that's considered an act of God or an act of nature. And shoe on the other foot, his tree's blown onto your home. Unless they were liable, they didn't do something. The tree was visibly dead. You told him, look, do something, and he did nothing. That could be considered liability. But if it was just looked like a live tree and the heavy winds blew it over, he didn't do anything wrong. Nor would you have if it was your tree.
Okay, I got
Interesting
you.
distinction.
But it would be on his policy to remove the tree, though, right?
Yeah. Now your policy might help afford some coverage for tree removal, but
Okay.
generally, if the tree at that point is on his property, his insurance should cover the damage to his home and tree removal.
Right. But if in other words, if my tree damaged his home would be covered by his policy, but the tree removal will be covered by my policy.
If part of the tree's still on your property.
Oh,
yes.
I see. Oh,
Yeah.
interesting. Wow.
And there's limitations for tree removal
Okay.
on the home policy. Most
Okay.
times, they'll pay whatever it costs to get it off the home if it's on the home. And then a lot of times it might be a cap of $500 or $1,000 for tree removal.
Tree removal is expensive.
It can be expensive,
Very
absolutely.
expensive. Is there other riders for that?
No,
Okay. Yeah.
no. And that can vary by carrier, but generally, no. The limit's the limit. Yeah.
Interesting. Well, Steve, yeah, it was fascinating. I'll tell you.
Yeah.
Rick and I learned a lot about insurance, and I tell you what, just the fact that I'm going to save money on my rentals is great. My rental, renting cars is going to be great.
Yeah, absolutely. Don't take that rental car.
No.
Again, I don't tell people not to get it, but for the cost, $15, $20 a day, I personally don't get it. I feel it's kind of.
And they should talk to their agent just to make sure.
Absolutely.
Or they can talk to you, of course. And how can they reach you? What is your website?
Our website is www.gannonagency.com.
Excellent. And also, there's a link to that below, and you feel free to talk to Steve anytime. Steve obviously knows a lot about insurance, and we thank you so much for being on the show.
Yeah, it was a real pleasure. Thanks for
My
coming
pleasure.
out.
Thank you, guys.
Thanks, Steve.
Appreciate it.
And that's it for today. Thank you all.
Bye.